Right, Chair, you're live on YouTube whenever you're ready.
Okay, thank you. I'd like to welcome everyone to the virtual meeting of the Corporate Affairs and Audit Committee. Can I remind all participants that the normal rules of procedure apply? For example, comments and questions need to be directed through the chair. As we're meeting virtually, proceedings may take slightly longer, so your patience is appreciated. As per our virtual meeting procedures, if questions have been received prior to the meeting, I'll call on the relevant member at the appropriate time to raise the question. If you're invited to speak, please state your name and be as specific as possible about the issue to which you're speaking. And whilst members of the public can view this meeting via YouTube Live, will not be able to actively participate or comment on proceedings. As this meeting is being live streamed, can I remind all participants that their conduct should reflect this? Apologies for the delayed start there. There were some technical issues. So I will start with agenda item 1, apologies for absence.
No apologies received. Thank you, Chair.
Yeah, thank you. Agenda item 2, declarations of interest. Do we have any? Okay. And I'll go to agenda item 3, the minutes of the Corporate Affairs and Audit Committee from the 15th of October. Does anybody have any amendments, or are they agreed?
Agreed.
Okay. And I'll go on to agenda item 4, and that's the annual governance statement report. I'll pass that over to the relevant officer. Picking up on that one.
Chair, there was a revised agenda issue summary, sorry. It's embedded within the statement of accounts report.
Right, yeah, it is. We've just had that conversation, but for some reason I haven't got that agenda in front of me. Hang on. Okay, so I'll just go on to the agenda item 5 then, audit report, results reports. And I'll pass that over to the relevant officer and we'll pick up the bit I mentioned on the next item.
Okay, thank you, Chair. Stephen Reid, appointed auditor from EY. Chair, let me start and then I'll hand over to Mark Rutter just to highlight a few of the specific aspects within the audit results report for the Council. Clearly, I wanted to start with members with obviously the context for the audit. Like everything else this year, that has been atypical. And I think fair to say that the impact of COVID-19 has caused significant additional work, given the increase in the risk profile, not just here, but across all local authority audits. And some of the key areas where we've seen as auditors the impact on the risk assessment is around property, plant and equipment, work around key judgments in respect of pensions and other judgmental balances, and then the disclosures around going concern and whether there ought to be any material uncertainties around the financial position disclosed within local authority financial statements. Members may be aware that the Financial Reporting Council issued guidance at the outset of the pandemic towards the end of March, beginning of April, which focused on the need for the preparers of financial statements and auditors to pay due regard to audit quality and not to sacrifice that for arbitrary timetables. I have to say, I think management and officers have taken a very sensible and measured approach. I can assure the committee that there has continued to be good working relationships between my team and Ian's team. We have worked well to navigate through the challenges of the financial statement preparation process and the audit process with a focus on quality, but also not just that, with a focus on the well-being of the finance team and my audit team. Having said that, Chair, before committee today is a provisional audit results report recognising the status of the audit. We have completed a significant proportion of work, though there is some items outstanding in relation to the conclusion of the audit, and those items are summarised at Appendix B. Notwithstanding that, and subject to the satisfactory conclusion of them, I do intend to issue an unqualified opinion on the financial statements, and as previously advised to the committee, a modified opinion in respect of value for money in relation to the provision of children's services in light of the Ofsted report that was issued towards the end of the financial year in question. Section 4 of the report identifies the audit differences, and those are also set out in the covering paper to the financial statements prepared by management. We've confirmed our independence as we're required to do, together with those other matters in the appendices, Chair, which we're required to report to you under auditing standards. And one of those areas is in respect to fees. We're in discussions with management, and we haven't concluded those discussions yet, with a view to agreeing fees for 1920 and also any additional elements of impact in relation to 1920 for the reasons that I've set out. Before I pass to Mark, Chair, it would be remiss of me not to just place on record my thanks to date to Ian, Justin and the rest of the team for the support that they've provided to us in allowing us to discharge or make good progress in discharging our professional responsibilities. So with those comments, Mark, Chair, let me hand over to Mark just to highlight a few of the key aspects in terms of the findings from our work.
Yeah, thank you for that, Stephen.
I think you're on mute, Mark.
Yeah, you were on mute at the start there, Mark. Sorry.
Sorry, falling for the old trick. I was just saying, if I just start by mirroring Stephen's message there around the thanks to Ian, Justin and their team for the support we've had during the audit. So if I just quickly run through the main points from our audit, which we highlight within the report. On the risks around management override and fraud in revenue and expenditure recognition, we don't have anything to report, so just confirming that. With regards to land and buildings in the accounts, there's a couple of elements to touch on. So the first one is, obviously, we reported in our audit plan addendum that the council's valuation this year had been provided on the basis of a material valuation uncertainty. The accounts disclose that fact within them. We're comfortable that that doesn't mean you can't place reliance or use the valuations. It's just for users to be aware that there is an increased uncertainty to them. Within those assets, there were three in particular that we chose to focus on during the audit. They were the 2 Centre Square buildings and the Tees Advanced Manufacturing Park, TAMP. And we focused on those because they are really the 3 main assets the council has, which kind of have a commercial basis to them, and the valuation's more likely to be impacted by what's been going on with COVID-19. So we asked our property experts to look at the valuations of those, and we came back and concluded that actually our experts agree with the experts that management have used to provide the valuations. We do note that the valuations used in the accounts are towards the bottom end of kind of what we'd expect, but they are within kind of a reasonable range, so we're comfortable with them. Now, moving on to the Centre Square assets as well, they were both recognised in year, so they are a finance lease, so that they came on the balance sheet, if you like, during the year with matching entries to liabilities and the asset side, and then were revalued at the year end. And you've seen the draft accounts that you originally received that there was an impairment on those. We've subsequently kind of agreed with management that actually they were perhaps initially recognised at too high a level in terms of that initial lease liability on the assets. Councillor Rooney?
Just a minor point. Can you just reference the page number when you're talking about something? That would just be really helpful. Thank you.
Yes, certainly. So at the moment, I'm talking really about pages 17 and 18 of the pack, pages 11 and 12 of our report. So, sorry, on those Centre Square ones. So we've agreed with management that they're working through an update to that lease calculation. That will not change the end value of those assets in the accounts because they were subject to the year-end valuation. As I say, we've kind of looked at that and we're comfortable with it. What you will see is actually a lot of the impairment during the year will be removed and effectively replaced by a lower initial recognition value, and that will match by a lower liability on the balance sheet. So the net impact will be a reduction to the expenditure for the year because of a lower impairment charge and a lower liability sitting on the balance sheet. And Ian and Justin and their team are just working through the final numbers for that, and we'll confirm them kind of at a later date. We'll move on to the following slides, number 19 in the pack, pensions. The main thing to pull out here is we did identify, as part of our pension fund audit, an overstatement within the asset information given to the actuary to inform their IAS 19 calculations for individual employers. That flows through to the council's accounts, and we'll talk about that overstatement a little bit more when I do the pension fund report. So management have worked out the impact of that on the council's accounts and corrected for that. So that just led to a 4.7 million increase in the net pension liability The other main issue on pensions this year has been McLeod. So you might remember last year, McLeod was recognised within liabilities as an age discrimination case and a proposed remedy. After the reporting date this year, I think it was in September, MHCLG put out a consultation of how they actually intend to implement the recommendations from the court case of McLeod and address that discrimination. The actuary hasn't allowed for that within the calculations this year. Well, what they've basically said is for active members, the proposals are very, very similar to what they've used. For deferred and pensioner members, they haven't made any allowance, but they think that the amounts are immaterial. We've asked our pensions experts to just confirm that for us. We're still going through that process, but our expectation is that we will agree with the actuary on that, and we're not expecting it to be a material point. So we're happy for the accounts to kind of use the valuations provided by the actuary, subject to that being confirmed by our pensions experts. If I move on to page 20 of our report, and I'm going to dovetail this with one of our VFM risks around financial sustainability. So we focused on the cash flow forecasts for the authority going beyond the 31st of March, and obviously we're kind of 6 months almost into that period. We're just waiting on management to give us cash flows after the 31st of March. I think that's beyond the normal analysis cycle of local authorities, kind of being that annual process that you'd start in January or February looking at the following year. So management are pulling that together to us. But so far, we're comfortable that the authority has sufficient cash and liquidity. We are aware that the council approved 4.9 million transfer from reserves in the contingency reserve into the general fund for next year to cover the impact of COVID-19 on the 2021 budget position of the council. So we're comfortable that the authority has sufficient reserves, having done that, to get through the period of 12 months. We do, however, note that the budgets for 21-22 will need to allow for the full impact of COVID-19, because obviously that reserve transfer is a one-off and can't be repeated every year. So for the impact of our VFM, as they're quite heavily linked, we've not focused too heavily on the impact of COVID-19, because actually we're looking at what management did in the year from the value for money perspective, and obviously COVID-19 came up quite late, and a lot of the budgetary impacts and everything were afterwards. So we've also looked at the preparation of the medium-term financial plan pre-COVID and the reasonableness of the assumptions in that, and we have nothing to report on that front.
Can I just pause there, Mark, a second? Scott, have we lost the feed?
Yes, Chair. If you're happy, I'm trying to interrupt. Can we take a 2-minute adjournment just until I can re-establish the feed?
Yeah, of course. Not running away, I'm just sorting out a delinquent dog that thinks it's fun to pull at wires.
Okay, Chair, the feed is back on.
Okay, thanks for that, Scott. Apologies for anybody watching this meeting online. There's a slight interruption in the feed. I'll hand back. We're still on agenda item 4, and I'll hand back to Mark Rutter from EY to continue his presentation.
Thank you, Chair. So the only point I had left to really cover was just our VFM risk around the Ofsted report. So members will remember we reported previously as part of our audit plan addendum our intention to qualify the value for money opinion in respect of the Ofsted findings. We reported at the time that there had been the initial report since the original